Do you ever see this spending being justified based on current events?
Well, first of all, the debt continues in good times as well as bad. We never have any surpluses when times are good to pay off the deficits we incur when times are bad. But I want to correct a couple of mistakes that you made earlier on with the debt. First of all, the debt to GDP, it's actually 125%, not 105%, because the 105% doesn't count the debt held by the Social Security Trust Fund. So when you count all the debt that's outstanding, it's 125. But that doesn't even tell the whole picture, because you have to look at the state government debt and all the municipalities, because everybody is looking at the same tax base to repay the debt. So when you measure all government debt in the United States, you're looking at 140%, 145% of GDP, but that's just the tip of the iceberg, because it doesn't count any of the unfunded liabilities of the United States government. Those are commitments to pay things like Social Security or Medicare benefits or guaranteed student loans. And when you add all that together, you're talking about several hundred times the GDP of how much we've run up in debt. And the problem, contrary to what everybody is talking about, the problem isn't the debt ceiling. The problem is the debt. The problem is we keep raising the ceiling, so we keep on piling on more debt.
Now, Steve, I want to give you a chance to respond to that. I know we've talked about how the national debt has grown and how those figures just continue to grow, of course, when you do take the time to factor everything in. Is this something that you see as just inevitably continuing to grow, especially the way that Congress is operating right now?
If you want to continue having a capitalist economy, yes, it has to grow. And this is the reason why I find some of this alarm quite laughable, frankly, because I'll take one of Peter's figures about the level of government debt being 145% of GDP before some of the other things he added in. That's actually less than the level of private debt, which is running at about 165% of GDP right now. And that's the real problem. Personal debt is a problem. Personal debt does constrain what individuals can do, and falls in personal debt do cause crises. That's what we should be worrying about. But all the stuff about government debt, and I'm talking specifically of the federal debt here, because federal debt is different to state debt. It doesn't have anything like the same problem. In fact, it's part of the reason why capitalism works, because when the government runs a deficit, it creates an identical surplus for the private sector. The government deficit is the private sector's surplus. If the government runs a surplus, the private sector runs a deficit. I know this is hard for people to get their heads around, but it's actually the accounting involved, and it's easily shown using accounting software that if the government spends more than it gets back in taxes, it puts more money into private bank accounts than it takes out through taxes. And the only question is, does this end up meaning the Treasury has a negative account at the Federal Reserve, or a positive account at the Federal Reserve? That's what bond sales are for, and that's what the coin could be for as well.
Peter, I want to come back to you on this, because, I mean, obviously this is a broad conversation about the state of debt that we will continue here throughout the half hour. But the question is, what are really the negative, the downsides of holding all of this debt? Because it does seem like there's a lot of give and take in this.
Well, the debt is a huge problem. It doesn't help capitalism. It interferes with capitalism, because what happens is the government is taking resources away from the private sector and diverting them to public spending. And this undermines capitalism. It undermines savings and investment and all the things that we need to grow our standard of living. The problem is much of this debt now is being monetized by the central bank. The Federal Reserve prints money to buy up all this debt, and all that is levying a massive inflation tax on the economy, and this is only getting started. Prices are going to explode in the United States for all manner of consumer goods, especially goods relative to services, because the American economy, after years and years of deficits crowding out private investment, we are completely dependent on the productive capacity of the rest of the world. We are running record trade deficits. Just yesterday, we printed the largest monthly trade deficit in U.S. history, better than $73 billion. Those deficits are going to keep getting higher and higher. And eventually, and I think relatively soon, the value of our money, the dollar, is going to collapse. And all the prices of the imported goods are going to be going up much faster than they are right now.
And Professor Wolf, I know we have pretty much this same conversation with you quite regularly about trade and what Peter's talking about. What do you make of Peter's comments there?
Well, I'm always mystified by Peter's comments, because if this is against capitalism, he does have a problem of explaining it. Is everybody wrong except him? Is everybody making a terrible mistake? Is the system self-destructing?
Most people, yes.
I don't think so. I think this is a system that's got basic problems and is trying to solve them by printing a great deal of money and exploding its debt. It's really solving one set of problems by this debt creation, by this monetization, and then it creates a new set. And it has bumbled through for 2 or 3 centuries doing this over and over again, and everybody kind of knows that eventually you're going to solve one problem by creating another one, and then you won't be able to solve it, and then this system will come down. That's the problem.
Well, American capitalism did great until the U.S. government corrupted it. You know, we had a vibrant free market economy under a gold standard when we had honest money, when we didn't have a federal income tax or Social Security tax. We didn't have any of these types of spending programs that we have today. And we had a thriving middle class. We had an economy that really was the envy of the world. We built a standard of living that was unmatched anywhere else in the world. The problems really started when more government spending and the Federal Reserve came around. So these problems were not created by capitalism. They were created by government's interference with capitalism. And every time government tries to solve the problems that they create, they make those problems even worse.
Well, Steve, I want to give you a chance to weigh in on this. I know we've talked a lot about the different systems, but do you see the United States as having a free economy, especially when it's Congress that is deciding to continue to add on to the national debt, which they say that we own, but the American people don't really seem to have much of a choice in the matter?
Well, the American people have a choice. They can do what happened during the 1920s. And let's go back. I think that's before, I think Peter would admit that's before government debt got to be particularly large. At that stage, government spending was about 5% of GDP or less. And Calvin Coolidge decided to run a surplus for his entire term. And during the 1920s, he did precisely that. He ran a surplus of roughly 1% of GDP every year. And of course, the economy boomed, and he took credit for it and said that the surplus was the reason the economy boomed. When you look at the data carefully, what you find is, yes, there was a government surplus of 1% of GDP every year, and every year the private sector was borrowing roughly 5% of GDP to speculate on the stock market. Now that's what gave you the turbocharged economy, not the surplus, but the government, but the deficit being run by the private sector. To borrow and gamble, let me finish, Peter, to borrow and gamble on the stock market. And over that period of time, the private debt level rose, more margin debt, okay, just debt to gamble on shares, rose from 1% of GDP to 13% of GDP, and then crashed right back down again. That's what gave us the Great Depression. Now, that sort of irresponsibility on the private debt side is the real Achilles heel of capitalism, and worrying about the government's behavior is, frankly, identifying the wrong problem.
And Peter, I'm going to give you the final word. You have 30 seconds before we go to break here.
Yeah, the problem was the Federal Reserve was created in 1913, and it was their easy money policies in the latter part of the 1920s that inflated that stock market bubble. And when it popped, what created the Depression was the interventionist policies of Herbert Hoover and then Franklin Delano Roosevelt. That's why we had a depression, was because we had too much government and we had a central bank. If we didn't have either, then we wouldn't have had a depression at all.
All right, I know we've got a lot to talk about.
And we wouldn't have had the stock market bubble. You can shake your head, but that's the fact.